Hey, what's going on, guys? Appreciate you guys taking time out your day to listen to us. As always, this is Garati, local realtor, and Ronnie.
What's going on, guys? The mortgage ad over here.
Yep. So we found an interesting article that we wanted to share with you guys and also talk about. This right here is, as always, we just like to give you guys information, facts. We like to keep you guys informed and not influenced. And this right here is talking about, we're in the month of May, and it's regarding the mortgage rate forecast. No breaks are coming. I think the biggest takeaway in this month, correct me if I'm wrong, Ronnie, is that the Fed chair, Mr. Powell, indicated that there's no indications of hikes coming. We're going to keep things where they're at for now, if I'm saying this correctly.
Yeah. I think what they meet every 6 weeks. So they talked recently, and as we all have kind of known, every 6 weeks things can change on a dime, whether what reports come out. But them saying they're going to keep everything the way it is. They're not going to raise. They're not going to lower. We're kind of status quo. And obviously, the longer they do this, we're getting longer and longer in the year. So that leaves less opportunity for them to lower the Fed's fund rate. And the reason why they would lower the Fed's fund rate is, it means that the economy, has a handle on this tricky word, inflation. So as inflation comes down, they'll lower the Fed's fund rate, and then mortgage rates typically tend to follow. So that's kind of, I think what this article is kind of insinuating, that we're staying status quo for the month of May.
And speaking of mortgage rates, at least for this past week, the rates have been moving and more favorable for us as a nation. I believe last time I checked, it was literally a little above on the high sixes, low sevens. So compared to where it was at, beginning of the month, I think like around 7.5.
Yeah. So we got news this week, the consumer price index report, and it came in a little lower than expected, meaning they expected inflation at X%, and it was actually a little bit lower. So that was actually good, meaning, all right, we're getting a better handle on inflation. Inflation is slowly but surely coming down, and the mortgage market like that, right? They hate inflation. So, and since they got a report showing inflation is on its way down or easing a little bit, mortgage rates tip down a little bit. So kind of note to self, as you start seeing these reports, in the upcoming 6 weeks or whatever, each month, if you see the inflation expectation, if it's a lower than what, say, Wall Street expected, that's good for mortgage rates.
Yep. And speaking of mortgage rates, one of the mortgage giants, Fannie Mae, they're predicting, or they actually raised their forecast as far as what they originally predicted mortgage rates to be towards the end of the year. It was a little under 6%. Now they're saying anywhere between above 6%, in this case 6.4%. That's what they're forecasting. That a lot of the factors play into whether this is going to be the case. So like you mentioned before, every 6 weeks, I believe the Feds meet and kind of give us an update on what their plans are moving forward with the Fed rate.
Yeah, and what happened here is the end of last year, the end of 2023, the Fed spoke, and there was a report that showed inflation was really coming down. So they were saying we're going to have, maybe 4 or 5 rate cuts this year. So Fannie said, all right, if we have 4 or 5 rate cuts, we would expect interest rates to be, say, somewhere in the 5s. Now we're almost halfway through the year and we haven't had any rate cuts, and they're not specifically saying we're going to cut it. So that's why now the expectation's going a little bit higher, since the Feds haven't officially, cut any rate, the Fed's fund rate yet.
And once again, this is a lot of good information to know, because it's, you want to be informed, but you also want to be overwhelmed with all this information. Because if you're not in the mortgage world, or more so the real estate world, having this information may be too much, especially if you just want to focus on buying a home, selling a home. But with that being said, regardless of what's going on in the world of the Federal Reserve, if you're getting ready to actually buy a home, there's some basic stuff that you still need to do now, regardless of what's going to happen during the next Fed check. chair talk 6 weeks from now, whether or not they're going to keep things where they're at, or whether they indicate, hey, things are looking way better than we expected, so we're going to go ahead and start cutting the rates sooner than we thought. Regardless of that, these certain things that you still need to focus on, when it comes to getting the mortgage. And Ronnie, obviously, this when it comes to making sure your credit score is where it needs to be. Work on your credit score. Work on saving up for a down payment. Understand your debt to income ratio, and also check out different mortgage loan types and terms to see what fits you. Because we mentioned this before, you can't time the market, but all you can really do is see where you're at in your personal real estate journey, and making sure that you have the right professionals in your ear guiding you along that journey.
That's right, and this is great because we can't control the economy or what the feds are going to do, but obviously these things right here we can control. You can't control your credit score, and one big thing to mention is the higher your credit score, the better your interest rate you're going to get. Your credit score is directly correlated to the interest rate you're going to get. So the better your score, the better the interest rate the bank's going to give you. Obviously, saving up for the down payment, understand debt to income, all that stuff is stuff that you can control and get, the best mortgage for that. Whenever you're going to buy, you're putting yourself in a great position.
Well said. Well said. So the biggest thing is, hey, stay informed. Don't get overwhelmed. There's a lot of information out there. That's why it's critical, as Ron's mentioned before, to stay local in the sense of working with people that are in your local market when it comes to your lender, your realtor, your mortgage, your insurance guy, your home inspector. All these people may play a huge factor in when it comes to you making that leap and that jump and buying a property in today's high interest rate market. So, all right. So, with that being said, as always, we appreciate you guys taking time out of your day to listen to us. We love to keep you guys informed and not influenced. So, appreciate you guys' time.
Yeah, if this sparked any questions, put them in the comments below.
I love it. Love it. Love it.
All right. Take care.
Until next time.